Hi everyone, thanks for joining me today. I will be providing a rather quick overview of ValueLine's two ETF services and recommending one ETF to buy right now. However, my main focus today is to answer your ETF questions or questions that you have about ValueLine in general, so please enter them into the Q&A panel. I will try to answer as many questions as I can following the brief presentation. Before I begin, for those joining us for the first time, I want to provide a brief overview of who we are at ValueLine. We are a New York headquartered corporation that has been providing investment research for more than 85 years. Our research, which is created in-house by our staff of 70 analysts, economists, data experts, and quantitative specialists, is completely unbiased and independent. Unlike many Wall Street brokerage firms, ValueLine has no investing banking business with any company. ValueLine does not execute trades for its subscribers and therefore has no vested interest in whether our subscribers buy, sell, or hold a specific security. An ETF, or exchange traded fund, is a marketable security that is essentially modeled after specific indices, industries, commodities, bonds, or a bundle of assets, such as an index fund. Most commonly, an ETF is a collection of stocks that tracks a specific index, sector, industry, or region. Let's now start with ValueLine's ETF service. Once signed in, I'll head to the dashboard. This is the main landing page for subscribers. The new ETF service can be accessed via the quick links. The heart of the product is the screener, which includes data, analysis, and information on approximately 2,650 ETFs. More than 30 fields are divided among 6 categories. Every field is defined. All you have to do is hover over the question mark. Included among these fields is ValueLine's ETF rank. This is a unique proprietary estimate and is only available from ValueLine. Its goal is to predict an ETF's future performance relative to all other ranked ETFs. Like our famous timeliness and safety ranks for stocks, the ETF ranks range from 1 highest to 5 lowest. The screener also allows users to create customized lists using only the criteria that is most useful to you. For instance, let's say I want to only focus on those ETFs ranked 1 by ValueLine, those that have a relatively low expense ratio, of less than 0.5, and it's had a successful 2021 with a year-to-date performance of greater than 30%. In just a few clicks, the ETF universe of 2,650 has been reduced to 16. Screens can also be adjusted by going right into the criteria, or a new screen can be started by just simply clicking on New Screen. Let's now click on Run Screen and see the results. As you can see, the results have surfaced several ETFs that are industry focused, such as oil and gas, energy, brokers, retail. More on that later. Clicking on any of the ETFs will open our full report. For example, let's take a look at the Invesco S&P Small Cap Consumer Discretionary Fund. Our reports contain a wealth of knowledge and information, but right off the bat, you will see that the risk is high. This is certainly not an ETF for everyone. On the second page, we can see why. This ETF's top holding, by far, is GameStop. the poster child of the so-called meme stocks. There is a good basic lesson here. Before committing funds to any investment, we strongly urge a careful look at ValueLine's reports. Going back to the screener, an ETF can also be accessed directly from the ticker search. Here is the report on the First Trust ValueLine Dividend ETF. And that's how you use the screener. The screener is a powerful tool, and it provides in-depth reports on more than 2,600 ETFs. For those investors who want more direction, I want to introduce Select ETFs, one of ValueLine's monthly selection service. This product can also be accessed via the quick links. Published monthly, ValueLine Select ETFs is designed to help investors build and manage a diversified portfolio of exchange-traded funds that are expected to outperform the broader market over the near and long term without taking on undue risk. Every recommendation is handpicked by the ValueLine Research Department. Each month, regardless of the market climate, we provide a comprehensive 15 to 20-page report highlighting just one ETF that is recommended for purchase. Our selection process utilizes an industry approach, and recently we have achieved some big wins. For instance, in late 2020, we recommended the iShares Transportation Average ETF, ticker IYT. This ETF holds U.S.-based equities from the railroad, trucking, logistics, and airline industries. At the time of our recommendation, we were confident that the economy would soon start to recover from the pandemic, which would require transportation services of all kinds. In just 4 months, we recommended that our subscribers sell and take a 70% profit. As for a current selection, let's take a look at our most recent report. We recommended the iShares MSCI Global Gold Miners ETF, ticker IRING. It is today's one ETF to buy right now. We chose this ETF since it should offset the negative consequences of inflation. This passively managed fund, which has an expense ratio of just 0.39%, seeks to provide investment results that before fees and expenses correspond generally to the total return performance of companies engaged in the business of gold mining. The precious metal has long been hailed as an effective hedge against inflation, and although Ring has underperformed the S&P 500 index in recent weeks, we expect the ETF to pick up momentum should inflation exceed expectations in the months ahead. With any well-balanced portfolio, diversification is key, and if you are considering an inflation hedge, investing in gold mining companies is a solid long-term strategy. A rational aim for investors should be to ensure positive long-term performance at a lower level of risk and to avoid chasing returns. Indeed, in a world where equity prices continue to rise somewhat unrestrained by traditional fundamentals, buying precious metals to add some diversification makes sense. For more information on Ring, I suggest a look at our full report, which includes full fundamental analysis, information about the precious metals industry, a look at the top ETFs holdings, as well as updates to previous selection. This includes updated buy, hold, and sell recommendations. This is the end of the formal presentation, and I will now take your questions. I want to thank everyone ahead of time for submitting questions. Okay, first one. I have been investing in mutual funds for 35 years. Why should I move to ETFs? All right. First, if you've had success with mutual funds, then there may be no need to shift to ETFs. However, perhaps your next investment is an ETF. ETFs do have some advantages over traditional mutual funds. They're more liquid since they trade daily on an exchange, and they generally offer lower fees. Next question. Why are some ETFs not ranked by Value Line? Our proprietary formula looks at each ETF's pricing history, leverage, volatility, among many other factors. A lengthy trading history of at least a couple years is required. So newly listed ETFs, we'll cover them, but they'll be unranked. Next question. I'm considering an ETF-only strategy. Do you think this is a good idea? I think this can be done without a problem, but you do have to be careful. You don't want to hold too many ETFs or hold a bunch that overlap in their objectives. For instance, I just recommended a precious metals ETF, but you're not going to want to hold, well, not necessarily multiple mining ETFs. Diversification is important. Going one step further, though, it may not be worth holding a large group of ETFs, regardless of diversification. At some point, you could probably consolidate into the S&P 500 or a total stock market fund. I didn't mention it earlier, but with Select ETFs, we recommend a new ETF every month, but are also very aggressive when it comes to selling. We don't want the portfolio to balloon to 20 ETFs. Presently, we're only holding 5. Next question. What are the commissions on ETF trades? Commissions on ETFs are typically very, very low, usually just a few dollars per trade. In addition, there are a number of brokerage houses that offer commission-free trades on ETFs. Next question. If ETFs are that good, why purchase stocks? I don't think it's a one or other choice. An ETF investor can add individual stocks to gain exposure to a particular company or industry, and vice versa. At Value Line, we've long preached a portfolio of individual stocks supplemented with other investments like ETFs, bonds, mutual funds, etc. Would you kindly share your views about using ETFs to internationally diversify stock portfolios? This is a good question. Perhaps you own a number of US-based stocks and want to add international exposure. Unless you're familiar with those markets, this can be challenging. Instead of trying to find the quote best stocks based in Europe or Asia, for example, perhaps you buy an ETF that specializes in that area. This can be done in our screener, which may as well show. So if you were looking for international exposure, under description for region, you can then search by these countries or continents, or emerging markets. So you would be able to pinpoint a region pretty quickly. All right, let me see what other questions we have. Can you give an example of how expense ratio works? Say I buy an ETF for $10,000, so expense ratio is 1%. How much fee do I pay and when? Does the fee depend on how long you hold the ETF? All right, typically you'd pay the fee at purchase. And a lot of times it's annually. So you would pay 1% to the manager of the ETF annually. Let's see. In a $300,000 portfolio, how much would you recommend we buy of one ETF or mutual fund? All right, difficult question. That's going to depend on your risk tolerance, your age, what you're going to want to use the money for, when you're going to want to use the money. But in any portfolio, we always recommend that you have at least 10 or 20 holdings. I'd imagine, most people would equal weight that. So If you have, 10 holdings, you would have, $30,000 per holding, or 20 would be $15,000 per holding. It's not wise to have all your eggs in one basket. And that brings up a good point with any of your investments, whether it's stocks, ETFs, mutual funds. Rebalancing semi-regularly is important. If you have one of your 10 stocks triples in value and now it's making up a large percentage of your portfolio, you're probably going to want to rebalance that. It's worth looking quarterly or at least annually at those kinds of things. If you can only afford to invest in one screening service, would you suggest the Value Line Investment Survey or ETF Service? It depends on your objective. The Value Line Investment Survey is analysis on 1,700 stocks, while obviously the ETF is 2,650 ETFs. So if you're interested in individual stocks, of course, the Value Line Investment Survey. If you're interested in ETFs, the ETF Service. And then following, here's a question actually about the makeup of the Value Line Investment Survey. So we track 1,700 stocks that trade on North American exchanges. That's the New York Stock Exchange, NASDAQ, and Toronto Exchange. These are 1,700 of the largest, most heavily traded stocks. At present, almost 60% are large cap, which we define as over 5 billion. 35% are small and mid cap, that's $1 billion to $5 billion. And then the remainder are small caps. The universe of 1,700 stocks changes constantly as stocks get acquired, delisted, go bankrupt. And of course, we're always adding new stocks to make up for the losses. So the universe changes on a weekly basis. Let's see if there's more questions. Here's a question on taxes in regard to ETFs versus mutual funds. In the end, the tax implications are very similar. I mean, you're still going to pay capital gains. Here's a couple questions. So I guess people got in a little late. My recommendation was the MSCI Global Gold Miners ETF. The ticker is RING or RING. By the way, this presentation will be available on our YouTube channel and on our website within the next 48 hours. So if you want to revisit it. There's a couple questions about the services costs. For that, it depends on how long of a subscription you'd like. There's typically a reduction in annual costs if you subscribe for longer. It can also, these products, if you're an existing customer, can be bundled together. So if you have questions about the costs, I suggest you call 1-800-VALUE-LINE and speak to your account representative. All right, I don't see any further questions. I'm going to wait 30 more seconds just to see if anything else comes in. While I'm doing that, I just want to thank everybody for participating and for submitting your questions. I greatly appreciate it. All right, I think I'm going to call it right there. All right, thank you so much.